right, we are live. We got Nick and Nathan with us here today. How are you guys doing?
Good, Gabe. How are you?
Doing well, doing well. All right, so to get us started, why don't you guys let us know who you are, what you're doing, and how you got started in real estate in the first place.
Yeah, so I'm Nathan Sanders. I'm a former CPA and now I'm in sales. Started in real estate because I wanted to diversify my portfolio pretty significantly, and real estate is a great way to do that. Partnered with Nick because one day he hit me up and said, "Hey, do you want to invest in um, a commercial real estate property in Westminster, up in the Denver suburbs?" And I said, "Yeah, sure, that'd be great." He said, "Yeah, let me talk to some people." Nothing came of that, but it kind of planted the seeds of like, how do we want to get this going? Like, do we want to invest in real estate, and how do we do that? So that's really what happened from the start of it. So, yeah.
Perfect. Yeah, and Nick Newby, one of the founders of NANJS LLC with Nathan. We got started, like you said, before I reached out to him. I kind of talked to a handful of people, knew some people that were in real estate, thought that it'd be a great opportunity, and started realized pretty quickly that I was not going to be able to get into anything that I wanted to individually. So I said, well, let's find all the other people that are like me that have a little bit of cash to risk, but not enough cash to go out and buy, big apartment complex or something like that. So started looking at some crazy ideas like the commercial real estate property that Nathan was talking about. And then, like you said, even though nothing came from that, we had some conversations with some people that were like, yeah, this would be a great idea. We really like it. This may not be the right one, but let's keep looking. And that's kind of the genesis of how we got started.
Right on. And so you guys are relatively new to the space, correct?
Yeah, we've been operational for the last 2 years. We bought properties just about 2 years ago, but we've gone really slow. We started out, we took about a year to 18 months before we really even settled on a location to buy. Then took about 6 months to go ahead and buy in that location, and now I've kind of sat on the properties that we have before we're now about to start raising funds for a next venture as well.
That is awesome. And we'll go into this in a second, but actually, let's just do that right now. So you guys got started just a couple years ago. You're relatively new. You have a few properties already under your belt. You're looking on to the next thing. It sounds like multifamily is the next shot. Was that about right?
We kind of we've gone back and forth. Right now we have five total properties, 3 single family homes, a triplex and a fourplex. And we've kind of thought about a similar type of mix for the next time, about 60% single family, 40-ish% multifamily, because we feel like that gives a good blend of risk to reward, kind of following like a typical investment CAPM type model of like, how do we kind of get enough of a foot into the multifamily pool to take advantage of the high returns, but also have some structure, some safety for when things start to hit the fan.
Gotcha. Okay. So, so it sounds like you guys are buying in batches, essentially. So you've already bought a few single families and a few multifamilies. So what is your bread and butter right now? If you just kind of take us through what your criteria is, what you're looking for. I know you just touched on it a second ago, but just go a little bit deeper into how you're operating your business right now.
Yeah, so it's kind of a buy and hold strategy. So I mean, we're not looking for an appreciation play specifically with this first LLC. That may change down the road, but really the quick and dirty method, the way that we figured it out was like, this is worth pursuing in greater detail, was if the selling price of the property was less than 1 month's 1% of 1 month's rent. So if a property was selling for $70,000, but we could get, was that 700 a month, then it was worth pursuing into greater detail, and then at least seeing what that held. So
you guys are using the 1% rule to identify your potential buys.
Mm-hmm.
And are you using that for both single family and multifamily?
We did, yeah, for the most part. With the caveat that we knew that it was easier to get on multifamily properties, so we kind of use that still as the baseline to focus our search, but then tried to expand up from that 1% rule on multifamilies and gauge the risk that we to kind of settle in on the two properties that we got. And that's kind of been pretty successful for us so far.
Awesome. All right, so I want to delve a little bit farther into the nuts and bolts of your business and your analysis. I know, Nick, you have quite a background in data and analytics, which is a good benefit for the real estate sector for sure. So kind of why don't we start out? There's different phases to any real estate transaction, and it all starts with finding a lead. How do you guys go about finding the potential properties that you're going to buy? And then how do you, what criteria and how do you analyze those properties?
Yeah, so to kind of start off with, we really kind of focused on where we or our set of investors were already located, to kind of give some initial qualitative review. So even though I am an analytics guy, I kind of wanted to have some understanding of the markets that we were going into. And then we use that to start to narrow down and look at that kind of 1% rule in those markets. So us being in Denver, the 1% rule really doesn't ever exist in Denver at all. Right?
Same as Seattle. It's not a thing.
Percent, right? So we kind of pretty quickly shifted away from the Denver area. And then it was really about scraping Zillow ads just to see kind of what markets had anything close to the 1% rule. So for a project that was kind of separate from the real estate world, I worked with a client in my day job, scraping Zillow ads for prices, previous sales, and then I used the technology to go ahead then and scrape deals for us to try to see like, okay, which deals are going to make, which have rental estimates above 1% that are going to make it worth it for us. And then actually that was interesting to kind of give us an idea of like where we could focus. But ultimately, how we came upon the location, Joplin, Missouri, where we ended up, was really just a friend referral. A friend came up and we were telling him the idea, talking about it in Denver, and how there's no way we could find these metrics anywhere around here. And he's like, "Oh, you should come out to Joplin. You can make that work easy." And I didn't believe him until we started looking at the numbers, and I was like, every property you look at was at least 1%, if not 1.8, 1.9. It's like crazy.
That's great.
Really, we'd like to have some really cool analytic way of getting to more properties, but the first nut that we cracked was a friend
networking.
lead. Yeah.
It all I've had a number of people on the show, and I think every single one of them, either their first or their second most powerful lead generation tactic has always been networking. Just building relationships, talking to people. Eventually, you're going to find something. So. Worked for you guys too, even with those the powerful brain of analytics behind you.
Right.
All right, so that's how you guys your first deal came through somebody that you actually knew, and then you went about and you decided on that deal based on the 1% rule. Is that right?
Yeah. So that was kind of what got us into that market. Kind of looked through Joplin, Missouri. I don't know if you know about it, but there's like 60,000 people in the town roughly.
Are you saying Gotham, Missouri?
Joplin, Missouri.
Joplin, okay.
Yeah, so you may be familiar with the tornado that went through, 2010 or so. Yeah.
No, I'm not sure, but it's tough.
It's tough. Tough on the city, but yeah. So that was kind of how we narrowed down the location. Oh, and I got lost.
Yeah, you just disappeared into the background.
So that's how we kind of narrowed down the location. Was noticing that the whole area had met the 1% rule for us, and then we started narrowing down to the properties that we wanted to look for, and decided that we needed to take a trip out there and start looking at actual properties, decide on which ones we wanted to go ahead and pull the trigger on. And like we mentioned before, like you said, we bought in batches, so we knew we wanted to buy 4 to 8 total properties and try to get to 8 to 12 units total. That's kind of where we started.
Okay. And the next step once you find a property is you got to finance that property. It sounds like you guys did that with your own capital. Is that correct?
Our own capital, and then we also brought in a few investors with us as well. So we have 4 investors that came along with us, and then we finance with the local bank in Joplin as well.
It's great. And you mentioned Joplin is a 60,000 city. Is it in a bigger metro, or are you guys looking for the smaller metro areas to invest in?
Yeah, mostly the smaller metro areas. Kind of the criteria for that is the biggest thing is making sure that it's not one employer. For instance,
Yep.
Bloomington Normal has two major employers, right? Like State Farm is headquartered there, and the Illinois State University campus is there. To me, that doesn't make sense, right? Because if State Farm decides we're going to move to Atlanta, the bottom drops out of the housing market. So we look for kind of a more dispersed workforce from the standpoint that if one company decides to leave or they go under, you're not affected. The whole town's not destroyed, right? So Joplin had, at the time we were looking at a medical college that they were just opening up. So there was going to be 400 new residents coming in. Like a dog food plant was opening up. So there was a lot.
Very cool.
Yeah. Well, hey,
got to make it somewhere.
That's it. So yeah, it was. I mean, it just seemed like there was a diverse enough workforce that any one segment goes under, and it's not going to affect long term, or it's not going to affect drastically the housing market. So.
Yeah, that makes sense. Having a diverse workforce. I've looked at mobile home parks in areas that were pretty much supported by one industry, and it's a risk. It doesn't mean that it's a horrible investment. It just means that you got to go in eyes wide open. So
yeah, look at Lordstown, right? Like 5 years ago, that would have been a great investment, but now, when the Ford plant shuts down, it's like, ooh, that's scary for an investor.
Yeah. Look at Detroit.
Yeah, the automobile industry in general, right?
Yep. All right, so that's what you guys are doing. You found your properties, networking. You finance them yourself, and you finance them with other private investors. How about the operations? How are you guys handing that over to property management? Are you guys operating it yourselves? It sounds like it's out of state for you. So how are you going about doing that?
Yeah, so since it's out of state, we do have property managers out there on site. We've talked about doing some of the property management ourselves, but with it being out of state, it really doesn't make sense. I think in future ventures that are closer to the Denver area or closer to where we are, I think we may want to get into that a little bit more, just because giving up a percentage off the top makes it tough. But it's also been nice to be just a phone call away from managing everything. So a lot of the little things get handled, and then we just have to worry about handling the big things. But even then, we've still been on site every year for the last 3 years that we've been buying and owning the properties. So we're still pretty close to them.
That's great. Yeah, I'm just listening to you guys. I'm pulling 2 things out of there. For one, that 10% property management fee, totally worth it. I mean, having to deal with that every night and day, especially when you're getting into larger numbers, it can be hard. And then I forgot that second thing, so we're just going to move on from that. All right, so we've kind of heard about your guys' business, about how you get leads, how you take them on, and then now how you're operating them. I want to go into a little bit more on the experience side of things. So, we all know real estate it's a roller coaster. Emotionally and financially, you're going up, you're going down. So kind of tell us, go into a story about kind of the low point that you guys have had and what lesson that you kind of pulled from that.
Yeah. I mean, I think, yeah. So I think the lesson is never buy sight unseen. At least go in the place. So we bought, I think we purchased three single families and one that triplex. And we were riding pretty high. I mean, we were like, all of these are working out. This is great. So we came across a fourplex that was
single families rented out in like 3 days. Tops.
Yeah.
Wow.
Yeah. It was just, I mean, we're like, why haven't we done this sooner? This is amazing. So this fourplex came up, and we were like, all right, well, let's go for it. Like, it looked good. It met the criteria. There were a few like kind of pulling things. It was like, you know, we're running into a couple of issues with inspection. The big thing was, so we settled on a price. The appraisal came back lower than the price than the contract price. So the buyer or the seller dropped it to the appraisal price immediately, and we're like, you know, you start having that nagging doubt of like, are we? What's
is this
going
a
on?
mistake?
and it turned out. I mean, it's turned around now, but yeah, those first few months were pretty dreadful because I think the big thing that sold us on it was out of the four, there were 2 units already rented. So we thought, okay, we're at least going to cover our debt service, our utilities, anything that we have there. We're at least going to break even on this no matter what. Well, immediately one of the tenants moved out and the other stopped paying rent. And so we had to deal with that. And in the meantime, there was I think we've gone through 3 water heaters since then.
Oof, that's tough.
On that property. We've gone through, we've done some new flooring. We've done a couple of refrigerators. So, I mean, it was just every week it was like our property manager would call and it's like, I'm not picking up the phone. She can leave a message. This is bad news.
Yeah.
So yeah, that was pretty low for a while. So we were kind of scraping by on cash. And so Nick and I both had to kind of give a loan to the LLC to float the cash for a little while. So we weren't.
So the lesson you pulled out of that one was do a little bit more. Don't buy sight unseen.
Don't buy sight unseen or have a. I mean, our realtor was pretty good, so I wouldn't say, you know, have a realtor that you can trust, but yeah, I mean, just do your due diligence to your point earlier, right? Like, I mean, you want to make sure that it's there, right? And so,
yep.
We
actually, our group just walked. We were going to buy a 10 unit out in Columbus, and you know, it looked good on paper. It looked really good. We started talking to the tenants and everything, and basically it turned out that there was going to be high vacancies, and so once we purchased it, we were going to have about 60% occupancy, which meant that it wouldn't be cash flowing on purchase. Once we fixed it up, it would be cash flowing, but we just decided to walk on that one. So we know your pain. We didn't go through with it, but I know what could have happened, and so I can feel you there.
Definitely lesson learned. I mean, it was an expensive lesson, but I mean, it'll pay back in spades down the road because now we know, you know, I mean, and you walked away, and that's something that I think comes with experience, right? Like to be able to look at a deal and just be like, I'm not doing it, you know.
Yep.
I feel like part of us, we're like, well, we're this far invested, let's just finish the swing on it. And
yep, that's a hard thing.
Yeah,
some costs.
Exactly.
All right, so that's the trough. Obviously, you know, there's peaks too. So what keeps you guys going? What gets you out of bed when you're thinking about doing real estate investing? Why are you guys still going forward with it?
Yeah, I think probably is not even necessarily like the economics are nice right now that we've gotten through the trough. That's obviously a big perk, but I think probably the thing that keeps us going is that when all of this kind of the bottom of the trough was really hitting at like December timeframe, we talked to our investors, kind of told them, hey, here's what 2019 looked like. We think that 2020 is going to look much better. Here's our plan. We're going to go out to the properties and fix them up ourselves to try to really kind of turn it around. And all of our investors are like, cool, sounds good. We'll come out with you. We'll come help you tear up the floors and fix up floors and paint the walls, whatever we got to do. And I was like, wow, that's like really cool that these other investors that were passive were like trusted us, that they thought it still liked the idea. They felt like it was still, and we had still made good plans, even if they hadn't paid off at the point. But the fact that they were kind of on board and said, hey, let's all go do it. You know, everyone falls sometimes, so let's all pick it up and fix it. I think that's
I love it. Yeah, for sure. I haven't heard of that happening before, but having the passive investors go out and be a little active, that's a great story. I love that.
Yeah. So about a month ago, Nathan, one of the investors, were already out in Missouri, in St. Louis, so they came on down, and then me and two of the other investors loaded up in a car from Denver, and drove 12 hours across Kansas to go and pair up floors and paint, and it was fun. It was a good time. We all had a fun time too. It's just hanging out, a bunch of guys.
That's great. Yeah, and that's one thing that I feel like a lot of people overlook is that flipping houses, getting rentals up and ready. It can also just be a lot of fun, especially if you're doing it with the people you like. I personally enjoyed it. And it sounds like you guys do too. So I'm going to switch gears just a little bit here. We've talked about your experiences. We've talked about, your business, how you're running it, the nuts and bolts. And so now kind of go into the personal side of things. So what habit do you guys think for yourselves, what is it that contributes the most to your success? That if somebody else were to pick up the same habit, they would see a measurable impact on their own business?
Good question.
Yeah, it's a really good question. I think that I think it could be a good and a bad habit, and I'll explain why. So, a good habit I think is being willing to look at every deal. Now, I think we get into problems like this fourplex that Nathan just talked about. The kind of the trough is looking at every deal and then trying to paint every pig can kind of be a problem. But being willing to look at all of them, even if it's way out of our range. So, like, we'll look at a 200 unit multi-million-dollar apartment and just like run the numbers, look at what it would be like, knowing full well that's like, hey, that's not where we're at right now. But just to go through the process of like, okay, what would this cost? What's the value? What effort would we have to put into it? Who would we have to talk to get financing from it? How much would we need to expand our investment group? I think that's a big key, at least for our future growth, is just to continue to like always look at like what's any deal going to look like, because I think that'll help us to get to our next level when we're ready for that. Do you have any other ideas?
Yeah, no, I think I went in from my career kind of spanned CPA and taxation into sales, which is kind of a weird transition. But I think the big thing was an open mind and getting to yes, like trying to get to like, how can we make this work? So instead of saying, well, that'll never work, it's like, well, how can we make that work? And I mean, to Nick's point, could be a blessing and a curse. It's like, how can we make this one quadplex work? And it's like, like this, you put a bunch of money into it and then it'll start working eventually. But it's like one of those things where it's, always keeping that open mind and always having just the way that you can say, how can we get there? Like, how do we get there instead of that'll never work?
I like it. So basically practice makes perfect, and kind of have a yes attitude when you're going into things.
Yep. Yeah.
Perfect. All right. So we try to keep these to about 20 to 30 minutes. So we're running on the tail end of this episode here. So you guys need something. You guys need things too. So if somebody were to bring you something, what is it that you would like for them to bring you? Skills, network, anything like that.
Yeah, I think we're always looking for new markets, kind of like we talked about. That because we're kind of looking at these tertiary markets that Joplin is, under 100,000, kind of smaller areas. It's hard to know where all those are, right? We only knew Joplin because of a friend, So I think hearing about where there's markets that other people aren't interested in, I think that's kind of a good place for us to start looking. So people are like, hey, there's a bunch of deals over in this area, but it's not something that I'm into. For instance, a friend of mine was doing a bunch of deals in the middle part of the country, and then started mentioning some cities that he wouldn't touch. But he's like, hey, if you guys are interested, Toledo has good numbers. They just don't have the volume that I'm interested in. So take a look. Here's some deals. So I think that's always helpful. And then obviously just a network of people to continue to get ideas from. Because I think, we kind of have a one way that we've done this so far. And trying to come up with new ideas of like, how do you bring new people in? How do you get different types of investors and things like that?
Yep. Right. Yeah, I think new ideas in particular would be really cool to learn just from like what people have done, what's successful, what's not. I mean, just knowing the experience, right? Because I mean, we started this thing, we didn't have any investor experience. None of our investors had real estate experience besides buying personal property. It was like, we're going to do it this way. And I mean, hopefully we don't lose all y'all's money. So, but thanks for trusting us. to do so. Yeah. Any ideas are always welcome.
Ideas and networking. All right. And just kind of piggybacking on that, if somebody did want to reach out to either of you guys, what's the best way for them to get a hold of you?
Yeah, I think reaching out over LinkedIn, and either of us on LinkedIn would be great. And then we'd love to grab beers and chat, or virtually grab beers as the world is right now. So we'd love to chat.
Perfect. All right. Well, Nick and Nathan, thank you guys both for coming on the show. I can speak for everybody listening and watching. We appreciated the stories and the wisdom that you shared with us. So thank you for jumping on. Everybody listening and watching, if you guys want to get in contact with either of them, check out LinkedIn. It'll be in the notes. And we look forward to seeing you guys on the next episode.
Thanks, Gabe. It's a pleasure.
Thank you for joining us on the Real Estate Investing Club. If you've watched this far, I'm sure you've gotten a little bit of value out of this. So we would appreciate it if you hit that thumbs up, share it with your friends or family, whatever it may be. And if you'd like to share or partner with us on a deal, we absolutely love partnering on deals and are always looking for quality projects. Go to www.therealestateinvestingclub.com to get in contact with one of our partners. Otherwise, I hope you guys have an absolutely fantastic day, and I look forward to seeing you on the next episode.